Eric and Ryan both earned $150,000 a year. Eric followed the traditional wealth gospel. He believed cash is king, despised debt, and paid for his cars, vacations, and furniture using only a debit card. He actively ignored his credit, letting it decay to a ghost-like 580. Ryan only kept $15,000 in the bank, but he aggressively manipulated a three-digit number, engineering a flawless 815 credit profile. Eric laughed at Ryan for playing the bank's game. Then, hyperinflation triggered a localized economic freeze. Eric's savings lost 20% of their purchasing power in months. And when a prime business competitor went bankrupt, Eric did not have the cash to buy them out. The bank rejected his loan application instantly because of his 590 score. Meanwhile, Ryan walked into a Chase private branch, leveraged his 815 FICO, secured a $250,000 line of credit at 0% interest, and swallowed the competitor whole. Eric thought wealth was about hoarding cash. Ryan knew wealth was about accessing infinite liquidity. He did it by mastering a hidden financial caste system called the 300 to 850 FICO Matrix, a blueprint banks use to tax the ignorant and grant limitless leverage to the elite. The immediate payoff is understanding that the three-digit number attached to a Social Security profile is not merely a score. It is a rigid, unforgiving matrix. The 300 to 850 scale is an algorithmic trust metric that dictates the absolute cost of human existence in the modern world. It determines who gets access to capital, who pays the invisible poverty tax, and who is allowed to generate wealth using other people's money. Society frames credit as a tool for buying things. The financial elite understand it as a weapon for acquiring leverage. The system is broken down into 5 distinct tiers. Existing in the wrong tier guarantees financial slaughter, while ascending to the top tier completely breaks the rules of money. The bottom tier is total financial exile. A score resting between 300 and 579 is mathematically designed to keep individuals trapped in a permanent cycle of extraction. The matrix views anyone in this bracket as a catastrophic liability. Mainstream advice suggests these individuals simply need to budget better. The brutal reality is that society mathematically punishes this tier, ensuring basic survival costs significantly more than it does for the wealthy. In this tier, traditional banking ceases to exist. Major institutions close the vault doors, forcing reliance on predatory subprime lenders. A simple $5,000 auto loan in this bracket often carries an apocalyptic 25 to 30% annual percentage rate. Purchasing a vehicle to drive to work becomes a mechanism that drains future net worth. Security deposits for basic apartments are doubled. Utility companies demand massive upfront capital just to turn on the electricity. Cell phone providers require hundreds of dollars just to activate a line. This is the poverty tax in its purest form. The algorithm dictates that those with the least amount of money must pay the highest premium for absolute necessities. It is an engineered death spiral. Missing a single payment creates a cascading effect. A missed medical bill drops the score further, which triggers credit card companies to slash limits, which spikes credit utilization, which plummets the score again. Escaping this tier requires extreme, ruthless discipline because the entire ecosystem is built to drain liquidity faster than it can be earned. Ascending to the 580 to 669 bracket offers the illusion of participation. Society labels this fair credit. This is arguably the most dangerous tier in the entire matrix. The doors to traditional banks unlock, but the terms inside are highly toxic. The financial system loves individuals in this bracket. They are responsible enough to eventually pay the money back, but risky enough to justify exorbitant interest rates. This tier is the engine that generates billions in pure profit for megabanks. Here, a mortgage is possible, but it comes wrapped in financial barbed wire. The algorithm tacks on an invisible premium over a 30-year fixed-rate mortgage. An individual in this tier will surrender hundreds of thousands of dollars more in interest compared to someone at the top of the matrix. They are forced to pay private mortgage insurance, a literal fee charged to protect the bank from the borrower. Credit cards in this tier offer low limits and no rewards, carrying brutal 24 to 29% APRs. An individual in the 600s might feel successful because an auto dealership approved them for a brand new vehicle. What the dealership conceals is the 12% interest rate quietly bleeding the buyer's future wealth. Purgatory provides just enough access to shiny liabilities to keep individuals pacified while silently siphoning their disposable income into the bank's quarterly earnings reports. The 740 to 739 range is designated as good credit. It is the ultimate middle-class trap. The vast majority of the working population sits comfortably in this bracket, falsely believing they have beaten the system. They pay their bills on time, hold a few standard credit cards, and maintain a manageable mortgage. They are entirely unaware of the massive opportunity cost happening behind the scenes. In this tier, approvals are standard. Auto loans sit at average rates, mortgages are secured without extreme friction. However, the system intentionally withholds the elite perks. A 710 credit score guarantees a comfortable, average existence. It does not provide leverage. Banks view this bracket as a safe, predictable revenue stream. Individuals here are completely blind to the silent wealth transfer. They apply for rewards cards and receive standard sign-up bonuses, while completely missing out on premium travel hacking, 0% introductory leverage, and massive business capital lines. The middle-class trap breeds complacency. The algorithm provides a false sense of financial mastery, stopping individuals from pushing toward the upper echelons where the true power resides. Crossing the 740 threshold fundamentally alters the relationship between the individual and the banking institution. The matrix shifts from viewing the person as a consumer to viewing them as a partner. This is the excellent tier. The mathematical risk of default drops to near absolute zero because the algorithm guarantees safety. The banks engage in ruthless competition to acquire this tier's business. This is where the rules of money break down. Interest rates on mortgages plummet to the absolute floor. Auto dealerships strip away markups and offer subsidized financing directly from the manufacturer just to move metal. The true power of vault access, however, is the introduction of OPM, other people's money. Banks begin throwing massive lines of unsecured credit at individuals in this bracket. Introductory offers of 0% APR for 15 to 21 months becomes standard. Savvy operators use this tier to fund business ventures, flip real estate, and acquire cash-flowing assets without risking a single dime of personal capital. The bank assumes the risk, the individual captures the upside. An 870 score is a skeleton key that unlocks synthetic liquidity. If a market crashes, an individual in this tier does not need to liquidate stocks or sell assets. They simply swipe a card, access tens of thousands of dollars for free, and wait out the store. The pinnacle of the matrix is the 800 to 850 range, the God tier. Entering this bracket requires years of flawless algorithmic manipulation. It demands perfect payment history, exceptionally low utilization, and a highly diversified mix of installment and revolving accounts. Society rarely sees this tier, and the financial system keeps its true benefits heavily guarded. At 820, individuals stop applying for credit. The credit applies to them. Private wealth management divisions open their doors. Access to shadow limits. Credit cards with literally no preset spending limit becomes available. Premium concierges, waived annual fees, and unadvertised loan products are standard protocol. The banks know that individuals in this tier are mathematically bulletproof, so the institutions surrender entirely. In the God tier, debt is no longer a burden. It is a highly calibrated tool for wealth extraction. An 840 score means a bank will happily lend $500,000 for a commercial real estate deal on a signature alone. It means securing lines of credit that match an individual's net worth, allowing them to instantly act on distressed assets during an economic collapse. The 800 Club understands that the elite do not use their own money to build empires. They use the bank's money, and the bank happily hands it over because the FICO Matrix demands it. Ascending the 300 to 850 matrix is not about making more money. Income is entirely irrelevant to the algorithm. A doctor making $500,000 can be trapped in the 600s, while a barista making $30,000 can achieve the God tier. Escaping the lower levels and breaking into vault access requires cold, calculated manipulation of the 5 algorithmic pillars. 35% of the matrix is controlled by payment history. A single missed payment is a catastrophic algorithmic event that takes years to erase. Automation is the only defense. 30% is dictated by credit utilization. The wealthy do not max out cards. They artificially suppress their utilization by requesting massive limit increases and keeping statement balances mathematically glued between 1 and 3%. Leaving a 0 balance signals inactivity. Leaving a 1% balance signals absolute mastery over temptation. 15% relies on the length of credit history. Closing an old account is a lethal mistake. It destroys the average age of accounts and instantly shrinks available credit. The remaining 20% is split between credit mix and new credit inquiries. Strategic spacing of applications and a blend of structured installment loans and revolving credit solidifies the profile. The system wants the masses to remain terrified of debt or recklessly consumed by it. It thrives on the extremes. Escaping the matrix requires rejecting the mainstream narrative, viewing the 3-digit number as a strategic video game and ruthlessly climbing the tiers. The bottom of the matrix guarantees a life of financial subjugation. The top of the matrix guarantees the ultimate superpower, the ability to print leverage out of thin air.